Hello guys, welcome to the trading part. Bitcoin is holding at critical support on the daily. Today I'm going to give you an update on the technicals. I'm going to give you some information that might be indicating at least until the end of the month, tomorrow, the price shouldn't move that much. I'm also going to give you an update on empty GOX. Now that the news have cooled down, there's a little bit more information on what to expect from this over $9 million in Bitcoin that moved for the first time in almost 10 years. Guys, if this is the type of content that you like to watch, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And the best two things that you can do to support this channel is to watch the video until the very end and to not go anywhere without leaving a comment down below. Let's get started. We're about to close the month for May, and we have reverted over 50% of the damage of April. Later in the video, I'm gonna show you what's going on with the options that are about to expire tomorrow. There's 6.5 billion at stake. We're gonna look into how those options could influence the closing price on May. That's extremely important information. The closing price for a month, it's something that not serious investor is ignoring. I want to show you today this chart on the Nasdaq. As you can see, we've been having a crazy run on Nasdaq. Pretty much in April, there was only pullback that we had. And after this next leg up that started from April until today, we are starting to see for the first time that we are below this trend line. Of course, this is not the closing price today. We need to wait until that to conclude whether this is a breakdown. But at the same time, we're getting a high signal. This indicator is counting the number of divergences. And in the past 15 candles, we have two different divergences already. Make sure that you're following me on Twitter because as soon as these divergences are confirmed, I'm gonna post it so you stay fully informed. If you're trading just in crypto and ignoring the stock markets, that's like trading inside a bubble. We all know that even though Bitcoin is not always correlated with the moves of the stock market or anti-correlated with the dollar index, most of the time is. And if we were to see a correction in the rest of the summer with Nasdaq and S&P, there is 99% chances that Bitcoin will do the same. There has been some times in the past where Bitcoin becomes like a rebel and starts doing the opposite as the stock market. But eventually, these divergences in the directions of the price of stocks versus crypto eventually catch up. We've been for many days holding the point of control. Now you probably understand, if you're new in the channel, how important it is to identify using the volume profile, finding the area where there's been most volume, which is this bar right here. And that tends to act as resistance and support. Losing this level at this point puts us in the bearish area, and we could be targeting moving averages like the 200 on the daily or like the 128. Both of them have been playing significant role in holding the bull market in a healthy state. You can see as well that 69.5 after 4 consecutive days and leaving a big wick to the upside seems to be the new resistance, meaning that now the odds are that we could be taking down eventually 66 and going for 64. But that is just from the point of view of the structure of the price. But in today's video, again, I'm going to show you the data coming from the options, which might indicate that possibly we're going to have at least one more day of sideways. Reminder that we still have from 70 to 70.4 a CME gap on the hourly. We just had another CME gap at 67.7, but that got filled very quickly. As I say in my previous videos, if we were to hold the level of this channel in red here, we could have gone for the higher end, and that would have been the perfect recipe to take out all the liquidity from 71 up until 73. That was the hope that the bulls were having, to take that liquidity before the end of the month, make a close in May over the all-time high from 2021 and continue the rally to the upside. But unfortunately, we are in a different scenario right now. We broke down the momentum that we were holding from the 1st of May. Right now, we are below it. We could be continuing down straight away, or we could be going for a retest of the same channel. the highest we can go in the RSI right now without necessarily gaining any momentum and continuing on the way down is if the RSI ended up touching 61, which is something that we saw here. We broke down there on the 5th of March and we went many days with momentum higher. This resulted into this move here going still for a higher high. So be careful with that, because even if you lose momentum and start in a channel to the downside, the moment that you start that channel to the downside is not necessarily the highest price that you're going to reach. As long as later you get a lower low on that RSI, then that price could be a top with a higher chance. And look at this, that is the time we sold. After that, we have the largest leg down. In here, we are in a different situation. I think we have a range here of going up until the 60 and on the lower end to the 46. That's just for a very, very short term. So let's put those numbers in the reverse RSI, 60 and 46. So on the higher end, we can go to 70.2. That will completely take out the CME gap. So there is narrative to do something like that. It's absolutely possible, and it will still make a lower low, the momentum to the downside. On the lower end is 46, which coincides with 65. If we were to do that and close down the daily in this area, we will be for the first time in many days below the point of control and in the bearish area of the pattern. We are in a bull flag, but since we broke out and we made it back into 65, there's no doubt that this move here was a fake out, just a liquidity grab. And being a liquidity grab, the full execution of a liquidity grab is to drag the price as low as possible to get all the longs here, including the one excess. Closing down the positions in this area could make a big push to the upside. So I will say that yes, for the short term, this is bearish, but we are still in the flag, and the longer the flag is consolidating, the bigger the potential of the pattern. We are on Thursday, and I'm not liking seeing these two guys together on the weekly. Hopefully by Sunday, we can revert some of this damage. So far, this to me is starting to look a little bit toppy. There is very little amount of fair value gaps on the top of the price, and the price needs to make a big move to take the lower end. We have a fair value gap starting from 64.6. This is not just the only source of liquidity. Fair value gaps are amazing, but we need to look into other sources as well to look for confluence and different perspectives. One of the biggest news this week is this spike that we saw here in terms of whales depositing on exchanges. These are whales, large wallets. They tend to have a big impact in the price. One thing I forgot to say yesterday is that during a bull run, when the price is running extremely hot, almost non-stop, like in this area here of 2020, when the price pretty much went nuts, 320% with just a few pullbacks, you can see that at the beginning of that run, we have a big weak swell of deposits from 0 all the way to 158, which is a lot more than what we are seeing here. And that is because in a bull run, many long-term holders and large holders bought very cheap. And when they start seeing that you break above the new highs, they start doing these things. Yes, many other times they deposit, and right after a few days or weeks, the price makes a huge pullback like what we are seeing in here, that we went 71% down. But as you can see, this continuous deposits, we could say that the biggest pullback was this one of 30% that happened a few weeks after. But then there is no further deposits, so they deposit all they needed to sell into you earlier in the bull market, and they started executing that here at the top. Or maybe many of them already exit here. So what's going to be the effect of this second huge large deposit? It's concerning, and it can have a dramatic impact on the price. But one thing that we must clarify is that the effect doesn't necessarily need to be today or tomorrow. So tick a box and mark down that the whales have deposit. Let's continue watching this indicator for potential further withdrawals, which might revert the effect of all of this, like we saw from 6th of March until the 23rd of March. the ratio was constantly coming down because whales were continuously withdrawing, expecting further upside. The order book is looking very interesting. We still have the level at 73 with 800 being the most significant one to the upside. Very thin the order book to the upside. Some orders intending to sell at 68.5 were pulled out as the price was approaching it, which is indicating that they might be just putting them there for manipulation because really they didn't want to sell. They pulled them out before the price was too close. On the lower end, we can see that there is a big distribution here of orders from 65.8 all the way to 63.4, and the largest level is 65 with 789. If we look below that, the order book is again very thin. I'm going to give you a few insights in terms of the options that are about to expire tomorrow, and I'm also going to cover some additional news from Empty Gox that I found last night after I put out the first video that might clarify some things from yesterday. Guys, if you're interested in copy trading my bots, have a look at the link in the description called Copy Trading Bots. And if you're looking for a decent exchange, OKX is my place to go. We got 60,000 in a price pool, but if you're struggling to get KYC access or you might not want to do KYC, you can have a look at my links BingX, which is also offering 6,000 in rewards. BingX is amazing because it's not only going to give you exposure to crypto, but also to commodity, stocks and indexes. On Twitter yesterday, I mentioned that Bread was also running very hot. I believe this is also a meme coin and it has been building this 4-hour channel since the 14th of May. You can see how perfectly it's bouncing between the extremes, but then after not managing to touch the top, it also lost the bottom. So this is curving down in terms of momentum. This is a difficult to execute short trade. So if you are a beginner, stay away from this setup. And the reason is because after losing the momentum, this can still kick pretty high and get inside this pattern because it's a meme coin. I see it very frequently and you can get stop out, but there's no denial that the momentum has been lost. Therefore, Bitcoin bulls were very optimistic, betting on 72K or higher in terms of options. And since the options are expiring by the end of May and there's 6.5 billion at stake, let's have a look at the distribution of the puts and the calls. You can see that the calls here are pretty optimistic and the largest allocations start from over 70K. Whereas the puts, the largest allocations are at 64K. This is the largest bucket below the price. Some people are betting on 50K, as you can see here. So obviously, if the price goes to 72K or higher, it's going to pay those calls big returns. And the price needs to move below 65K to start paying big to the shorts. So if the price stayed here in the middle, it wouldn't pay much to either of them. Most options will expire without giving any returns. So there is a motivation for the price to just stick around this range that we are seeing here. This is just a probability, and of course, if something comes out in the news and it benefits the calls or the puts, it take a U-turn and not stick around in this range. One of the most important things that I didn't say yesterday about Empty Gox is that even though for the first time this 9 billion in Bitcoin is moving from one wallet to another and then into other wallets, putting everybody in the crypto space extremely nervous, these apparently are just moves for preparation to pay the creditors at the end of the year. There's an expectation that the payouts are going to start in October. The creditors are getting extremely excited. Think about this. You lost your allocation of crypto in an exchange 10 years ago. Since then, we know what the price has done, so even if you have $100, you're gonna get paid big. I understand that creditors are not gonna get paid 100% of their allocation in Bitcoin, but just a fraction of that, which might be small in percentage. But since the gains have been ridiculous in the last 10 years, no matter what, I think if I was one of those creditors, I will be thankful. On the other hand, if you didn't lose that money in this exchange after going bankrupt, I bet that 99.99% of them will have sold those coins or lost them in the last 10 years. Many things have changed. The way you self-custody your coins, there has been so many security issues, or people just losing their credentials, sending them by email. I think they should be thankful of the bankruptcy. Yeah, it must have been painful to lose your allocations. I also lost a little bit of Bitcoin in FTX. But if someone told me that Bitcoin is going to continue running like it's been doing in the past 10 years, and they pay me that fraction of a Bitcoin 10 years in the future, potentially that could be like winning the lottery. So why not? Alright guys, I hope you enjoyed this video. If you did, make sure that you don't go anywhere without leaving that comment and hit the like. I'll see you on the next one. Take care. Bye bye.